Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about RF Industries Limited annual report. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. RF Industries Limited offers a diverse range of products and services to various industries. The company's product portfolio includes coaxial connectors and cable assemblies, custom copper and fiber cable assemblies, adapters, electromechanical wiring harnesses, energy-efficient cooling systems, and 5G small cell integrated enclosures. The company also provides connectivity solutions for telecommunications and data communications distributors, including thermal control systems, integrated shrouds, and enclosures. Additionally, RF Industries manufactures radio frequency and microwave distribution system products such as dividers, directional couplers, and filters for signal distribution and deployment of in-building distributed antenna systems, wireless base stations, and small cell networks. The company's services include custom-designed cable assemblies and wiring harnesses for blue-chip industrial, oilfield, instrumentation, medical, and military customers. RF Industries also provides connectivity solutions to telecommunications and data communications distributors through its warehousing distributors and in-house marketing and sales team. Overall, the company serves a wide range of clients, including telecommunications carriers and equipment manufacturers, wireless and network infrastructure carriers, and original equipment manufacturers. The significant stock price increase of over 58% for RFI Industries Limited in the past year can be attributed to several key factors. The company's exceptional financial results for its fourth quarter and full fiscal year 2025 have been a major driving force behind this surge. With net sales reaching $22.7 million, a 23% increase from the previous year, and adjusted earnings per share, EPS, more than doubling to $0.20, RF Industries Limited has exceeded analyst expectations. The company's improved profitability is another significant factor contributing to its stock price growth. The gross profit margin increased by approximately 600 basis points in the fourth quarter, while the operating income transitioned from a loss of $2.8 million in fiscal 2024 to an operating income of $1.8 million for the full fiscal year 2025. Additionally, adjusted EBITDA surged to $6.1 million for the year. RF Industries Limited as successful strategic transformation has also played a crucial role in its stock price increase. The company's shift from being a product seller to a technology solutions provider has allowed it to diversify into new end markets such as transportation and aerospace, reducing its reliance on the telecom sector. This strategic move has not only improved the company's financial performance, but also increased its appeal to institutional investors. The interest of institutional investors in RF Industries Limited shares has been another significant factor contributing to its stock price growth. In the third quarter of 2025, there was an observable increase in institutional investors adding RF Industries Limited shares to their portfolios, further driving up the company's stock price. Overall, RF Industries Limited has exceptional financial results, improved profitability, successful strategic transformation, and increased institutional investor interest have all contributed to its significant stock price increase over the past year. The primary drivers of revenue growth for the company can be attributed to several key factors. The development of 5G networks has accelerated as expected, driving demand for custom cable assemblies and solutions. The integration of C Enterprises division into RF Connector division in 2023 has also contributed significantly to revenue growth. Additionally, the acquisition of Microlab/FXR LLC in March 2022 has expanded the company's product offerings and increased its market share. The company's focus on developing integrated systems products and solutions for key communications and industrial applications has also led to significant revenue growth. Furthermore, the increase in sales of custom cabling products and the expansion of foreign sales have contributed to the company's revenue growth. The success of the business strategy to expand through acquisitions of other businesses has also played a crucial role in driving revenue growth. On the other hand, the primary drivers of revenue decline include loss of principal customers, decrease in sales by independent distributors, and global economic conditions. The failure to effectively compete in a highly competitive market and cyclical effects impacting customer budgets have also contributed to revenue decline. Changes in trade policies, tariffs, and import/export regulations have further impacted the company's revenue. The company's ability to adapt to changing market conditions and its focus on developing integrated systems, products, and solutions will be crucial in driving future revenue growth. However, the impact of global economic conditions and changes in trade policies cannot be ignored, and the company must continue to monitor these factors closely to ensure its continued success. The analysis of net income and profit margins reveals a significant shift from 2024 to 2025. Initially, net income decreased by $0.9 million on page 22. However, this trend reversed on page 23, where the company reported a profit of $0.8 million after incurring a loss of -$3.8 million in fiscal 2024. By page 24, the net income had further improved, changing from a loss of $6.6 million to a profit of $0.1 million. The improvement in profit margins is also notable, with gross margin increasing from 29.1% in fiscal 2024 to 33.2% in fiscal 2025 on page 23. This increase can be attributed to the company's ability to offset cost increases through price hikes where feasible. As a result, the net income margin became positive, indicating improved profitability. Overall, these changes suggest that the company has made significant strides in improving its financial performance over the past year. The company's financial performance is a key indicator of its overall health and stability. One crucial aspect to consider is the generation of positive operating cash flow. According to the provided information, it appears that the company is indeed generating sufficient resources through its operating activities. This is evident from two separate points in the summary. Firstly, on page 10, it is mentioned that cash provided by operating activities will provide sufficient resources. This statement implies a positive outlook on the company's ability to generate cash flow from its core operations. Secondly, on page 22, it is reported that $4.6 million of cash was generated in operating activities as of October 31, 2025. This specific figure further supports the notion that the company is producing positive operating cash flow. In conclusion, based on the provided information, it can be inferred that the company is generating positive operating cash flow, which is a vital indicator of its financial stability and potential for future growth. The company's debt level has undergone a significant change. Initially, the debt stood at $16 million, but by page 10, it had decreased to $4 million. This reduction in debt is attributed to the minimum EBC revolving loan facility, outstanding principal amount. Regarding interest expenses, there have been changes in the interest rates applied to the company's debt. Initially, the interest rates for the EBC revolving loan facility and additional line were adjusted term SOFR plus 5% and 6.5%, respectively. However, by page 10, the current interest rate was adjusted to be either adjusted term SOFR or base rate, as applicable, plus the applicable margin. The changes in debt level and interest expenses suggest that the company has made efforts to reduce its debt burden and optimize its interest costs. Management is expressing cautious optimism about the company's future prospects. They are shifting manufacturing to other facilities to alleviate capacity limitations, expanding product offerings through partnerships, and planning to make additional acquisitions as part of their growth strategy. However, they also acknowledge the highly competitive nature of their industry, rapid technological changes that may lead to new competition, and the need for continued access to capital. The company is aware of the risks associated with its dependence on independent distributors and must react quickly to technological developments to remain competitive. Management recognizes that revenue streams are stable, but acknowledges that the industry is cyclical and has been impacted by economic conditions in the past. Despite these challenges, management intends to pursue cost-cutting measures and organic growth in revenue and profitability. Overall, management's outlook suggests a focus on adaptability, strategic partnerships, and controlled expansion through acquisitions. While there are risks associated with the company's current position, management is committed to navigating these challenges and positioning the company for long-term success. Supply chain disruptions pose concerns for operations. The extracted summaries reveal several concerns regarding supply chain disruptions that could impact operations. Third-party contract manufacturers may struggle to meet production and delivery demands on time and within budget, leading to slowed product delivery and increased costs. Page 11. Furthermore, global economic conditions can also affect the supply chain and markets, potentially harming operational results. Page 12. Additionally, there is a risk of production delays due to third-party manufacturers ceasing production or failing to upgrade technologies. Page 13. While inventory buildup concerns are not explicitly mentioned in the provided text, it does acknowledge allowances for slow-moving or obsolete inventory on page 20. That concludes the financial summary for RF Industries, Limited. Feel free to comment below, and I will be happy to answer them when possible.